Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. This Friday is when President Trump's higher reciprocal tariffs are set to take effect for those countries without trade agreements. Well, ahead of that deadline, the U.S. and the European Union did reach a deal. Here's President Trump.
We are agreeing that the tariff straight across for automobiles and everything else will be a straight across tariff of 15%.
President Trump went on to say the deal did not include pharmaceuticals and metals, and he said the tariff on steel and aluminum will stay the way it is. That's 50%. Also, as a part of this deal, the EU agreed to buy $750 billion in U.S. energy and to invest $600 billion in the U.S. on top of existing investments. We're also tracking a treaty between Australia and the UK to bolster cooperation on the AUKUS nuclear submarine partnership. In a moment, I'll be joined by Bloomberg Australia correspondent Paul Allen. But we begin with markets. Certainly a lot to digest in the coming week. We have earnings from megacap tech. There's the U.S. jobs data due at the end of the week. And most importantly, midweek, it's the Fed meeting. Let's take a closer look now. Joining me is Clark Geranen. He is the chief market strategist at CalBay Investments, joining from the San Francisco Bay Area. Clark, thank you so much for joining me. This week is going to be the season's busiest week for earnings. I think we have over 40% of companies in the S&P 500 due to report. Microsoft, Meta, Wednesday. We get Apple and Amazon on Thursday. How are you feeling right now about the quality of earnings from big cap tech?
We're feeling very positive. I think even this week we saw some great earnings come out and beating expectations. And so we're expecting to see the same. I mean, thankfully, with the news that came out today between the United States and the EU, I think that's just going to continue to push U.S. markets.
In terms of artificial intelligence being a big part of this mega cap tech story, is there something that you're going to be looking for in particular? Maybe not so much on what has been reported for Q2, but the guidance on CapEx going forward?
The CapEx guidance is probably the number one thing that I'm going to be looking at, just because over the past few months, there was so much uncertainty between tariffs, geopolitical, et cetera, that guidance was murky. You know, some companies were even coming out with multiple options as to their potential earnings. But now I think that there's so much more clarity. I think companies are able to provide a better guidance. And so I think that's important. And just seeing that the CapEx numbers are not reduced and are continuing to grow, that's really going to be what's most important.
So we have record highs now for the S&P and the NASDAQ as of Friday's session. And I'm looking at a PE for the S&P right now that's about 25 times. You're not concerned in the least that this market may be a little overextended and is perhaps a little expensive?
So I would say that we are concerned with the PE being up around that 25 number. I mean, if you do look at the S&P 493, so excluding the Mag 7, we're actually closer to about 20, which if you're taking a look at it internationally, they're right around 19. And so we actually feel confident that there has been some breadth within the S&P 500. Equal weighted is slightly trailing the S&P 500. So we actually feel strongly about the other companies as well. So not just these Mag 7. But the thing is, with the Mag 7, we have been seeing these strong earnings. So when you see strong earnings and they just continue to grow, it is hard not to discount them.
Clark, I'm interested to get your take on what you see in the macro right now. We get the jobs data for the U.S. at the end of the week. We're only expecting non-farm payrolls to rise by about 109,000 for July, maybe a move up in the unemployment rate to around 4.2. Are you concerned about building weakness in the labor market right now?
No, we're really not. I mean, we've seen that unemployment number hold strong, and we're not expecting to see a difference this week. From our stance, it's really looking at the rate cuts moving forward. I mean, we've had so many things that we've had to bounce our focal attention on this year. Unemployment and rate cuts obviously are the two that the Fed are looking at. And I think the pressure has just been so heavy on the Fed and Jerome Powell over the past few months to cut rates. I mean, obviously we've seen some puzzling interactions between President Trump and Jerome Powell, but we actually aren't thinking that there's going to be a rate cut this week. So we had said from the beginning of the year that we'd anticipate that more towards the end of the year. And I think at this point, we are going to see it probably in September.
So what might move the Fed to reduce rates maybe as soon as September? Would it be the fact that they feel confident about inflation remaining under control, or that there is more deterioration in the labor market that might cause them to act?
I think it would be the deterioration in the labor market. Because there really hasn't been any sign of them cutting based on the inflation. And obviously with the decision on Wednesday and not fully knowing what those unemployment numbers are going to be, I just don't see it happening this week.
You don't think, with everything that we're talking about in terms of new tariffs, 15% coming from European goods that will be paid by U.S. consumers, whether it's a business or an individual, we have yet to see a lot of that trickle down, I guess, to the retail level. But at some point, consumers will be asked to maybe pay a little bit more. And you're not concerned in the least about the inflationary impact of tariffs?
No, I think there will be an inflationary impact. I do think that it'll be more of a one-time issue. But that being said, I also think that it's a matter of taking a look at wants versus needs. So I think there's going to be certain companies that are able to thrive, and those companies that are more of needs-based, that's just going to be something that we're going to have to look at. Like, for instance, some of the luxury goods, and this kind of plays into actually the deal today between the EU and the United States. Obviously, some of those companies, handbags, for instance, we still could see a strong year. Some of those companies, Louis Vuitton in particular, have already had a strong year. But I think between the wants and the needs, I think people still are going to be purchasing.
So we have an initial print on GDP due this week, and expectations that maybe we'll see just a modest increase in household demand and business investment. How are you feeling right now about the American consumer first?
So, as the American consumer takes up roughly 2/3 of the GDP, we feel strongly that the consumer's been resilient. Through probably one of the rockier years that we've had in the last decade, the resilience of the consumer has been incredible. And so we really do feel like we're going to rely on U.S. consumer to keep pushing us forward. And they've done it so far this year, and I think we're going to continue to see that.
So we're getting more of these trade deals done, and with that, presumably greater certainty. Do you think the uncertainty factor in this trade war has kept businesses from deploying a lot of capital right now? Have they been very, very cautious in your view?
Yes, I would say they have been cautious. This has been the most uncertain that it's been in years. Even though we saw both equities and bonds go down double digits in 2022, I think this year has felt like a lot more of a shock, especially to investors. We've had clients that have been worried out of their mind when their portfolios were maybe even only down 10% at the worst. And now we're looking at markets that are up 10% for the year. But all of the uncertainty that we saw throughout this year, each one of those has really started to fall off of the table. First it was the tariff risk, then it was geopolitical. We even were worried more about the deficit at a certain point. And to us, it's really just the rate cuts that's now left on the table. So with all of these headwinds falling off, I think we're going to see companies and individuals feel more comfortable in order to deploy some of that capital.
Clark, we'll leave it there. Thank you so much for joining us. Clark Geranen, he is the Chief Market Strategist at CalBay Investments, joining from the Bay Area of San Francisco here on the Daybreak Asia podcast. Welcome back to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. Last Friday, Australia and the UK reached a 50-year defense treaty to underpin the construction of nuclear-powered submarines. For a closer look, I'm joined by Bloomberg's Paul Allen, joining us from our studios in Sydney. Paul, it's always a pleasure. It's been far too long, and I'm wondering if you could begin by just explaining to me how this deal is being framed.
Yeah, this sort of fits into AUKUS, Doug, but at the same time stands apart from it. And we can talk a little bit about AUKUS in a moment. But over the course of the 2030s and 2040s, the UK and Australia plan to develop their own class of nuclear-powered submarines, the shorthand SSN AUKUS class subs. So they'll be spending $41 billion to build up to a dozen of these submarines, and the first one will be ready by the early 2040s. They would be built first in the UK, but then shipbuilding would move to Adelaide and South Australia as well. So it's jobs, high-tech jobs at that. The UK is pretty pleased with this deal as well. It would be worth $27 billion to the UK economy over the next 25 years, and would also see the United Kingdom's nuclear submarine fleet expand from 7 subs at the moment to up to 12. So this is sort of an effort to really cement this part of AUKUS, even though the US seems to be, is conducting a review of the broader deal at the moment.
So talk to me a little bit about from your point of view, what you understand to be this review of the Biden-era deal when it comes to AUKUS, something that the Trump administration has undertaken. Is this being seen as a potential threat?
Yes, it is. And as with other US policy towards Australia, it's being met with a mixture of sort of confusion and trepidation as well. Because, as you mentioned, this is a Biden-era deal, and it was unveiled with much fanfare 3 years ago. And it has already seen Australia contribute quite a bit of money towards US shipbuilding capacity. I think it's been the second $800 million payment has just been made. So Australia has spent $1.6 billion so far, and the plan is to contribute $2 billion by the end of this year as well. And that is to boost US shipbuilding capacity because I'm sure, as you know, the US fleet at the moment is probably about a quarter below where it should be. Boats are being produced at half the rate required, so this is going to be a useful cash injection. So Australia's sort of been keeping its end up in the bargain, and then suddenly we hear that Elbridge Colby, the Undersecretary of Defence for Policy, has become a household name in Australia now, is running a review. So there's some head scratching in Australia. There's some sort of an attitude that, the British government did the same thing when Keir Starmer came to power. It's every government's right to conduct a review when there's a new government in power. But there's just a little bit of concern that considering this is a Trump administration decision, who knows what's going to happen next, right?
So if we can agree, at least in the near term, that this defense partnership between Australia, the U.S., and the United Kingdom will endure and it will continue to work on trying to create a bit of security for the Indo-Pacific region. I'm curious as to whether or not Beijing has weighed in on this at all.
Beijing has weighed in on this. They are not a big fan of the AUKUS deal. So it's funny in a way that if the US did end up pulling out, scaling back, cancelling, this would be very much a win for China. An end to AUKUS would be something that Beijing would very much like to see. In terms of Australia's point of view, I mean, there is the financial commitment that I mentioned. There is also broad but qualified support for proceeding with this. Defence spending never a particularly popular domestic policy, but at the same time, I mentioned that qualification of support. China is Australia's largest trading partner. There is absolutely no desire to put that relationship at risk. You might remember a few years ago, China levied a number of trade strikes against Australia, which have now all been wound back. And a couple of weeks ago, we had quite an extraordinary spectacle that you wouldn't have expected to see 3 years ago. Anthony Albanese, the Australian Prime Minister in China, for a 6-day visit, taking in a number of cities, having a banquet lunch with Xi Jinping. So the red carpet really being rolled out for the Australian leader in China, and there is no desire for that relationship to go back where it was 3 years ago.
So you indicated a moment ago that initially these attack submarines will be constructed in the UK and that at some point transferred for kind of completion in the shipyards in Australia. I didn't realize that Australia had that capacity to actually construct vessels.
Yeah, it does. I've had the good fortune to be able to visit the shipyards in Adelaide. That's where a lot of the shipbuilding takes place. And a lot of Australia's boats are built there. There have been previous agreements with New Zealand, the small neighbour just to the east of here, to supply frigates in the past. So, there is a pretty solid shipbuilding capability in Adelaide. And that would be given a huge boost if nuclear submarines were to start getting built there, and that would also require the beginning of a nuclear power industry in Australia, which we don't have at the moment. So there's quite a bit of excitement around the number of high-tech jobs that this would create, and really support the South Australian economy as well, because South Australia is a state that's typically struggled a bit economically.
So these new vessels, I'm imagining, would be under the command of the Australian Navy?
Those vessels would, that's right. And the first part of the AUKUS agreement, while these new vessels are being constructed, would be that Australia would take possession of up to 5 US Virginia-class submarines. Now, that's kind of where the US part of AUKUS is getting a bit unglued, because I mentioned before, and I'm sure you're aware as well, that the US fleet isn't quite where policymakers would like it to be. So giving Australia a Virginia-class submarine, or not giving it, we'd be paying for it, would require the assent of the president of the day to say, look, this isn't going to diminish the US ability to project force wherever it might need to. Now, under the current circumstances, that would be an open question. So that's kind of where the deal is struggling a little bit at the moment. Where does Australia get a nuclear-powered submarine in the meantime, until the AUKUS-powered subs are ready? And the current Collins-class submarines in Australia, were due for retirement next year. That the life of those is now being extended.
Paul, before I let you go, we've been talking a lot today about this trade deal between the U.S. and the European Union, and it would be helpful if you could bring me up to speed on where the U.S. and Australia are in the process of negotiating a deal. If I'm recalling this correctly, last week, President Trump praised Australia's decision to lift the import curbs on U.S. beef. Are there more things being, if you'll pardon the pun, fleshed out at this point?
Yeah, potentially. That appears to be one of the main sticking points, was that beef issue. Now, that's one of those unusual trade barriers that US beef wasn't being allowed into Australia for biosecurity reasons, and it dates way back to the mad cow epidemic of, many, many years ago now. So that was a sticking point. That's now been removed. So now there are no barriers to US beef coming into Australia. The broader question is, anybody going to buy it? Because Australian beef is, it's plentiful and it's popular as well. So I guess that's a question for another day. But now that trade barrier's been removed, hopefully the relationship can proceed, because, the US still put a tariff on Australia, even though Australia runs a trade surplus with the US, one of the few countries to do so. So that's a bit of a head scratcher too.
We'll leave it there. Paul, it's always a pleasure. Thank you so very much. Bloomberg's Paul Allen joining from Sydney here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.